Early stress recognition is the ability of a bank to detect warning signals in a loan account before it becomes a formal default. In credit risk management, waiting until installments stop being paid can severely damage asset quality. Early stress refers to operational, financial, or cash flow difficulties that indicate the borrower may soon struggle to repay obligations. It is important to distinguish between technical default and economic stress. A technical default occurs when a borrower misses a scheduled payment beyond the permitted due date. Economic stress, however, often appears much earlier through falling revenues, delayed receivables, rising leverage, or weakening working capital cycles. For example, a manufacturing firm facing declining export orders may still service loans temporarily, but its financial indicators already signal vulnerability. Recognizing such signals early allows banks to engage borrowers, reassess risk, and initiate corrective strategies before the account deteriorates into serious delinquency or non-performing status. The Reserve Bank of India introduced the Special Mention Account Framework to ensure systematic early stress recognition in bank loan portfolios. This framework classifies incipient stress before a loan becomes a non-performing asset. Under this system, accounts are categorized into 3 stages: SMA 0, SMA 1, and SMA 2. SMA 0 represents early warning signals even before payment delays, such as irregular operations or financial deterioration. SMA 1 refers to principal or interest overdue between 31 and 60 days. SMA 2 captures overdue amounts between 61 and 90 days, signaling significantly heightened credit risk. By tracking these categories, banks strengthen asset quality governance and trigger timely corrective actions such as restructuring, monitoring, or borrower engagement. Key takeaways: early stress detection prevents sudden loan deterioration. RBI's SMA framework creates structured monitoring before default. Proactive recognition improves recovery prospects and protects banking system stability and discipline.